There's a meltdown in the tech sector. Infosys, the stock, has lost nearly 12% in the last 1 week. TCS has lost nearly 4.5%, and then you have Tech Mahindra that's also lost about 8%. If you see stocks in the IT services sector, you'll see that most of them are bleeding. So you have to wonder what's happening here. And I thought I'd make a quick explainer, sort of delving into the reasons why this is happening and hopefully give you an idea of what to look forward to. This is not going to be a high production video. This is not going to be one of those long explainers. Instead, it's going to be a short, crisp explainer, just telling you what's happening right now and what could the future look like. That's it. Okay, let's start right from the beginning. This all started when Infosys released its result for the latest quarter, that is the quarter 4 of financial year 2023. And in it, they said that the revenue for the fourth quarter had actually declined when compared to the third quarter. Now, this wasn't really expected because in the third quarter, Infosys was very upbeat about how their revenue and profit prospects look like. There was also the fact that Infosys had another bomb up their sleeve. They also said for the next year, their revenues are actually going to grow in the single digits. Compared to the fact that Infosys revenue has grown in double digits in the last 2 years, all of a sudden, investors are getting spooked. There's also another fact that the likes of TCS and Tech Mahindra have also been very muted in their expectations, and all of a sudden, you have the perfect recipe for a meltdown. However, these are only the obvious reasons. If you want to really know what's happening, you have to dig a little bit deeper. Now, Infosys and TCS have clients in different domains across different geographies. So really, if you wanted to find out what's actually happening here, maybe it makes sense to look at what's happening to their clients. Let's take Infosys as an example. Infosys' biggest clients are in the banking and the financial services sector and retail, etc. However, if you start looking at what's happening in the US, you'll see two patterns emerge rather clearly. First, let's look at inflation. Now, inflation in the US has consistently remained elevated in the past 1 year or so. While traditionally inflation in the US would average at about 2 to 3%, in the past year, it's averaged at about 8%. Granted, it's actually coming down now to about 5–6%, but still consumers have changed their preferences. They're now cutting back on spending. They're worried if there is a recession, how will I actually live my life the way I used to? So they're falling back on discretionary spending and they're not making the same purchases that they used to, which means you're seeing a shift in purchase patterns across the US. I mean, look at Macy's. Macy's is a chain of departmental stores in the US. So you can buy household items, clothes and other accessories here, and they're kind of big in the United States. And last year, they actually observed something. They realized that most of their customers were actually cutting back on spending. They were going for coupons, vouchers, discount packs, and even smaller packs than they used to. And so Macy's decided to do something drastic about this. They decided to cut their own spending to cushion their bottom line. What did that mean? It also meant that they were cutting back on their IT spending. News reports indicate that Macy's had already planned to cut back their IT spending by about 10 to 15%. And Macy's is a client to companies like TCS, Accenture, Infosys. So you can see how that decision alone could have an impact on IT service providers in India. And Walmart did the same thing. They realized that customers were cutting back on spending and suddenly they revised their profit and revenue targets downwards. And now they're desperately trying to cut costs. And guess what? Walmart is a client to Infosys, which means that you can see how all of this could have an impact on revenues for the likes of Infosys, TCS, and other IT service providers, just like I mentioned earlier. There's also the fact that if you read the conference call that Infosys put out recently, you'll see that they're upfront about this. They're saying that there have been project-specific ramp downs, meaning some of these companies that had contracted some of the work to Infosys are now saying, well, let's hold up. Maybe we probably could hold up for a while and then do these projects later. And so Infosys doesn't have the opportunity to build their clients as aggressively as they could earlier. And suddenly, once again, you see this impact on both revenue and sometimes on the bottom line, although it's not happened with Infosys just yet. But that's not all. Last month, you also saw a lot of regional banks in the US completely collapsing because of interest rate issues. They had not done their risk management properly, and so as a consequence, they were short of funds, which meant that they had to simply shut shop. And Infosys draws about 2 to 3% of its revenues from these regional banks, which means that this also could have had a one-time impact on Infosys revenue, although it's hard to say this categorically considering Infosys hasn't divulged any details. Even other more robust banks in the US, like JP Morgan, etc., have all committed to cutting costs and bumping up their bottom line because they're worried what's to come in the future, especially considering the talks of an impending recession and all of that. So it's likely that these companies will also be relooking at their IT spending, and you can see how that could have an impact on India's tech sector. But wait. If people knew this already, if these reports that I'm quoting are from last year, then why didn't tech stocks come under pressure then? Why did investors wait all the while until April to finally realize that there could be something happening in the tech sector, something bad? Well, there are a few things you have to remember here. First, you have to look at the kind of impact the pandemic has had on businesses. When the pandemic struck, you had a lot of businesses that were reluctant to adopt tech, but were yet forced to adopt tech and transform their infrastructure just to keep pace with what was happening around them. And they had to consult with the likes of Infosys, TCS, and HCL to just get their tech up and running, which meant that most Indian IT service providers benefited from this change. In fact, Infosys revenues grew at a scorching pace in FY21 and FY22. It was almost at double digits. And then when FY23 came along, investors were expecting pretty much the same things, even though there were issues with the economy and the impending threat of a recession. And Infosys did nothing to curb these expectations, to hold back these expectations. In fact, if anything, they were even more optimistic about how things were shaping up. In the third quarter, they went ahead and told investors that they were actually revising their revenue targets upwards from 15 to 16% to 16 to 16.5% in constant currency terms. So they were telling investors, look, there's some problem on the outside. Yes, there's a slowdown in the economies of US, UK, and Europe, but everything's great here. In fact, we think it's going to get even better. So investors kind of expected that despite the headwinds, they were still going to make a lot of money off of Infosys because Infosys is giving us these rosy pictures, these optimistic assessments. And then all of a sudden they come along in the fourth quarter and they say, sorry guys, actually, you know what? We didn't grow in the fourth quarter. And for the next year, we're probably going to have to revise our targets to single-digit growth, even though in the last 2 years we've been growing at double digits. Sorry about that, didn't expect that. And you can see how this could impact investor confidence because one day you're thinking everything's great and the next day you're wondering what happened. You can see how the stock price could tank automatically very quickly just because the expectations weren't set right. And so the next question is, does it mean that Infosys and the likes of TCS and HCL were actually trying to mislead investors? Well, of course not. I don't think that these companies were trying to mislead investors. It's just that I think that they were also caught off guard. And the way it works is this industry is pretty simple. You look at the deal flow, you look at the kind of projects you're bagging, and then you use that as a metric to then project revenue for the future. So if you're consistently bagging massive projects, $50 million, $100 million projects, you can say with some degree of certainty how your revenue will look like in the next 2, 3, 4, 5 years, depending on the length of the contract. The only problem is in the past few quarters, we're seeing something called a decoupling. We are seeing that the total contract value isn't translating to revenues in the short run the way most companies have been expecting. Now, why does this happen? Well, it could have many reasons. Sometimes clients simply disappear because they go bankrupt. In other cases, they may switch vendors. They may go from TCS to Infosys. Or in even other cases, you could have companies that are trying to save costs by doing things in-house, all of which could be happening in the US and in certain parts of Europe because of what I just mentioned earlier. Everybody is expecting a recession. There's also the fact that some companies will simply pause work if they feel like business isn't going as usual. In previous con calls, Infosys had actually talked about a slowdown in the home loans market in the US. Now, a slowdown in the home loans market would automatically mean that most of these mortgage companies will not have as much work as they used to, which means Infosys can't bill their clients, and you see the immediate impact on Infosys revenues, which means that even if the contract is right there, it may not actually translate to revenue sometimes because of things that are not in your control. And when you put all of these things together, the revision in revenue targets, the fact that there's all this stuff happening in the US and UK and Europe with the economies and all of that, and the fact that there's a decoupling between the total contract value and the actual realized revenue, you can see why tech stocks are bleeding, at least kind of. The only question then is, will this continue? Well, here's my opinion. When companies present a rosy picture, especially blue chip stocks like Infosys and TCS, the automatic assumption from investors is to be over optimistic. They'll bid the company stock higher and higher and higher. But when suddenly that emotion turns negative, investors will be overly negative. They'll be overly pessimistic, at which point you'll see the stock bleed completely. And so my opinion is this: even though there's a lot of threat of recession, etc., looming on the horizon, I still believe that companies like TCS and Infosys are blue chip stocks nonetheless. They're good quality stocks. Sure, the immediate future may not look too rosy, but I'm not worried about that just yet, because if I were betting on Infosys and TCS, I'd be betting for the long term. So in reality, this wouldn't change my opinion a lot. That's it from me, and thank you for watching this video. Also, I know that this video is much shorter than the kind of stuff that I post earlier, and maybe there's a dip in production quality, but I wanted to get this video out as soon as possible so that everybody who's watching this channel and subscribe to this channel know exactly what's happening with tech stocks. And hopefully, if you're invested, maybe this will give you some insight on how to proceed with things. And so please pardon the dip in quality, and hopefully next video you'll see the same quality back again. And yeah, like always, just leave a like, subscribe, and comment your thoughts on what's happening with tech stocks. Also, do you think that the reaction is justified, or do you think there's something else happening here? Let me know your thoughts. I'll be reading all of the comments and I'll be replying to them as well. That's it from me once again. Hopefully I'll see you in the next video. Bye-bye.